Hey everyone, we have one of the biggest IPO of the season from none other than the Bajaj Group. They have come up with a new IPO of Bajaj Housing Finance after 30 years of their last listing of Bajaj Finance that was listed in 1994. And Bajaj Group has a long history of wealth creation for its investors. Especially that Bajaj Finance has been one of the biggest wealth creator in the history of Indian stock market. On Google Charts, it shows Bajaj Finance bonus and split adjusted share price of 5.75 rupee in 2002. And today it is at levels of more than 7,000 rupee. Now that's more than 1200 times return. Please note that it's not percentage, it's 12,000 times return. So Bajaj Finance is not a 100 bagger, it's a 1000 bagger company in the last 22 years. What an extraordinary wealth creation. Obviously there's a lot of excitement as Bajaj Group has come up with a new IPO after almost 3 decades. The question is, can Bajaj Housing Finance create wealth like Bajaj Finance? Well, that's not so easy. During 1994, Bajaj Finance was a tiny company. In fact, during 2002, Bajaj Finance market cap was just around 350 crore. So company had a long runway for growth because of its small market size and immense growth potential in the consumer lending space that was in a nascent stage during that time. The corporate sector was booming with growth in IT sector and Bajaj Finance lapped up the opportunity to become a leader in consumer lending space. Today, their new listing of Bajaj Housing Finance is already at a market cap of 58,000 crore and housing finance is already a highly competitive segment. So 100 times return from current level is 58 lakh crore of market cap for Bajaj Housing Finance, which I don't think is possible in the next 10, 20, 30 years. Having said this, can Bajaj Finance become a consistent compounder with potential 10 times return in the next 10, 15 years? Quite possible, provided investment is done at right valuations. So in this video, we'll deep dive into Bajaj Housing Finance business model, key strength, company's growth plan, financials, IPO detail, valuation and key risk. The idea behind this video is to answer 2 key questions. Is it worth investing in Bajaj Housing Finance IPO at current valuation? And more important question is, if you don't get the IPO allotment, would it still be worth investing in the company post IPO? Because I don't just discuss IPOs for quick gains. That can be easily done based on grey market premium. I like to discuss long-term wealth creation opportunities, which is my main goal behind doing this video. By the way, for quick gain also, Bajaj Housing Finance is looking great with very high grey market premium. But this video is more useful for those who are looking for long-term investment opportunities. And last thing before we start, the idea behind my video is to empower you all with the right knowledge so that you can make your own investment decision rather than buying selling stocks based on tips. Alright, let's get started. First of all, Bajaj Housing Finance is 100% subsidiary of Bajaj Finance. As the name suggests, it is in the business of housing finance. It is India's largest non-deposit taking housing finance company and second largest housing finance company. Here, non-deposit taking NBFC means you can't open a saving or current account with Bajaj Housing Finance. Then how does Bajaj Housing Finance raise money? We'll discuss it shortly. Please note that Bajaj Housing is classified as a upper layer NBFC by RBI. So RBI has categorization of NBFC in 4 segments: base layer, middle layer, upper layer and top layer. Upper layer means company is systemically significant NBFC. Please note that there are only 25-30 companies in upper layer category and Bajaj Housing Finance is one of them. Its product offering are divided into 4 segments: your home loan, loan against property, then lease rental discounting and developer financing. Although their primary focus is on individual retail housing loan, which is a lower risk and faster growing segment. As of FY24, home loan contributed 57.8% of their total AUM, of which 87.5% is salaried customer, 4.3% is self-employed professional customer and 8.2% is self-employed non-professional customer. Since salaried people have a very low default rate, Bajaj Housing Finance is a very low risk business. On top of that, a house loan is a secured loan, because in case of default, the lender can seize the property and auction it to recover the payment. Not only that, 75.5% of the home loan AUM are from customers with CIBIL score above 750. Clearly, high CIBIL score suggests timely payment of EMI that adds another layer of safety. The average loan ticket size of the company is 46 lakh as of June 24 and their average loan to value ratio is 69.3%. Company has a strong distribution network of 215 branches as of June 30, 2024, spread across 174 locations in 20 states and 3 union territories. Now they use various direct and indirect sources for loan origination. For instance, direct sources include partnership with developers. So when you buy a property from a developer, they have partnership with Bajaj Housing Finance and other finance company where you can avail the loan. Then they also leverage the digital ecosystem in partnership with digital players along with D2C model of direct consumer acquisition. Then indirect sources include channel partner, individual agents, third-party agents and so on. So that's how Bajaj Housing Finance identifies loan opportunities. Next question is, how do they raise money to give loan? So there are multiple sources of borrowing. First is bank borrowing, which is the largest segment with 47% contribution. Then 38% comes from NCD, that is non-convertible debentures issued to public, and remaining from National Housing Bank, commercial paper and so on. Please note that Bajaj Housing Finance has the highest credit rating of AAA for long term and highest short term rating of A1 plus by CRISIL. Now this is one of the biggest reasons why Bajaj Housing Finance is very promising company. Because of its strong parentage and leadership, company enjoys the highest credit rating that helps them raise fund at lowest possible rate. As of today, their cost of borrowing is 7.6%. Then another strength of the company is access to millions of people. Since it's a subsidiary of Bajaj Finance, it has access to all the customer of its parent. I absolutely love the way Bajaj Finance has built their business. They started with targeting salaried people in the early stage of the career by giving small consumer loan, like loan for buying a phone, washing machine, TV and other appliances. Now during that time in early 2000, the cost of customer acquisition was very high for consumer lending because the loan ticket size for mobile or TV is very small. Hence major banks did not focus on consumer lending that time and Bajaj Finance tapped this opportunity. Initially it was a high cost for the company, but with that they got access to one of the fastest growing salaried segment of India. That they later leveraged for cross-selling at zero acquisition cost. So the lifetime value of their customer increased big time. And today, Bajaj Finance has access to millions of customers and their creditworthiness. That actually helped its subsidiary Bajaj Housing in its growth and would continue to help in the future. That is one of the biggest reasons why I found Bajaj Housing Finance promising. Now this is the kind of insight you need before taking an investment decision. But for that, you need to read a lot. That's where I try to add value by spending nearly 8 to 10 hours a day doing my research and identifying investment opportunities. I also have a weekly video series where I share one exclusive video every week that also include my own investment details along with reason behind my conviction. But please note that it is a closed community of serious long-term investors. For more detail, you can visit my website or explore the join button of this YouTube channel. Now let us look at the future growth potential. So first of all, the demand for housing loan is directly linked to economic growth, and India is one of the fastest growing economies in the world. So as the Indian economy would continue to grow, people would become more prosperous and there would be continued demand for housing loan, simply because a house is a dream of every person. Then there are various trends within the economy like rising urbanization where people are moving from small towns to cities for better job opportunities. Mind you, more than 65% people in India still live in the rural part. So that would again continue to create demand for the housing sector for many years. Next very important driver is financial inclusion. Millions of people in India still don't have access to credit facility. That's where Indian government is highly focused on financial inclusion with various initiatives like JAM Trinity, that is linkage of Jan Dhan account, mobile and Aadhaar. Then formalization of economy with more and more white collar jobs would continue to create demand for housing loan. Please note that Bajaj Housing has a strong hold in this category via its parent Bajaj Finance. Then another positive news is that aggressive rate hike cycle in India are behind us. So over the last couple of years, RBI has increased the interest rate in India from 4% to 6.5%. This higher interest rate had a negative impact on NBFCs due to increase in borrowing cost and that put pressure on the NIM, that is net interest margin. However, now the rate hike cycle is behind us and it is expected that RBI would soon start reducing the interest rate. That would benefit the NBFCs like Bajaj Housing Finance in raising funding at lower interest rate. So clearly, there are strong growth drivers for housing finance sector of India. If you look at the data point, the overall NBFC retail credit book is expected to grow at 14 to 16% CAGR between FY24 to 27, and within that, housing loan have around 16% contribution. Overall, housing finance market in India is expected to grow at 13 to 15%. Now let us look at company's financials. So this slide gives a good picture of Bajaj Housing Finance in last 3 years. Please note that this data is in million. As of FY24, company's AUM stood at 91,370 crore against last year AUM of 69,227 crore and before that AUM of 53,321 crore. So AUM growth has been excellent in last 2 years at 30% CAGR. Within that, home loan has highest contribution with average ticket size of 46 lakh. Company's net interest income has grown from 3,481 crore to 7,200 crore. That's almost 2x growth. Net total income is also up nearly 2 times. And profit after tax has grown from 709 crore to 1731 crore. That's nearly 2.5 times growth. However, please note that this growth is an exception because of sharp recovery in the Indian economy post-COVID that resulted in huge surge in real estate sector in the recent past, coupled with attractive interest rate and improvement in asset quality. However, today the scenario is different. Interest rates are on higher side, that is putting pressure on NBFC's net interest margin, plus there is not much scope for asset quality improvement. So I don't expect such exponential growth in the future, but still the overall growth potential is very good. Company has a good return on asset at 2.4 and return on equity at 15.2%. Net NPA is top notch at just 0.1%. So fantastic asset quality. So the past 2 years of financial growth is exceptional, but past growth does not necessarily guarantee the same in the future. Hence, you need to closely track the future financials. Now let us look at the key risk in the growth thesis. So first key risk is regulation risk. Housing finance is a regulated sector where government and RBI regulations can significantly impact the growth rate. For instance, increase in interest rate in the country directly impact the net interest margin of NBFCs that result in a fall in profitability after a certain point when they are not able to increase the loan rates. Then second risk is increasing competition. There are already a lot of players in housing finance segment from top private banks like HDFC, ICICI, Axis, Kotak to your top PSUs like SBI, Bank of Baroda. Then housing finance companies like LIC Housing Finance, PNB Housing Finance, Tata Capital Housing. Then affordable housing finance has players like Awas Housing, Home First, Canfin Homes, Aptus Value Housing, Aadhar Housing. Plus there is lower spread in housing finance segment because home loan rates are on lower side. So it's not that easy to maintain high profitability in this segment. Then third key risk is volatility in housing demand. Although the structural story of housing sector is looking promising, there can be a phase where there is slowdown in housing demand due to temporary pain in the economy. Or if there are challenges in the real estate market like fall in property prices or fall in demand for real estate sector, it can directly impact the growth of Bajaj Housing Finance. Then fourth is asset quality risk. As an NBFC, the risk of fall in asset quality will always exist in case of adverse regulatory changes or economic situation that can result in high default rate. Plus, there can be a case where loans are given to less creditworthy people that fails to pay the EMI. That would directly impact the asset quality. Then company has major business from salaried people. So in case of job loss in Indian private sector, it can result in increase in company's NPA. Now let us look at the IPO detail and valuation part. Bajaj Housing Finance IPOs between 9 to 11 September. IPO size is 6,500 crore, out of which 3,560 crore is fresh issue and around 3,000 crore is offer for sale. Price band is between 66 to 70 rupee. On the upper price band, company would command a market cap of 58,240 crore. So it would be a large cap company from day one of listing. At upper price band, company would command a price to book of 3.72 based on its NAV of 18.8 as of June 30, 2024. Company's FY24 earning is 1731 crore and post IPO shares are 832 crore. That means company's EPS is 2.07. That means company would command a P ratio of 33 based on its FY24 earning. Please note that we have ignored Q1 FY25 earning for now. If you look at PE of other listed players, LIC Housing PE is 8, PNB Housing PE is 16, Aadhar Housing PE is 25, Awas PE is 28 and Home First PE is 32 at the moment. So Bajaj Housing Finance PE of 33 is certainly on the high side of the band, mainly because of its parentage of Bajaj Finance. So in my opinion, this issue is fully priced at the moment. However, for the long term, it can create good wealth for the investor because of its leadership in housing finance sector that has a bright growth potential. Having said this IPO is already commanding a high grey market premium of more than 70%. In case it gets listed at such premium, valuation would skyrocket. In that case, it would be better to wait for better valuation. There is no point buying the issue immediately post IPO at PE of more than 50. That would be madness. Remember that even if you invest in great companies, but if you invest at expensive valuation, then you can't create wealth. So in this video, we discussed the fundamentals of upcoming IPO on Bajaj Housing Finance, which is a leader in Indian housing finance sector with strong parentage of Bajaj Finance. Considering the growth potential in the Indian economy, housing finance sector is bound to do well. And within that, well-run institutes like Bajaj Housing Finance would continue to benefit from the trend. Company has a strong financial track record in the past with high profitability and top-notch asset quality. However, the issue is already fully priced at PE of 33. Having said this IPO is worth considering for long-term wealth creation. But in case you don't get the IPO and the share price jumps on day one, it would be prudent to wait for a better entry point. Now tell me in the comments, what is your take on Bajaj Housing Finance? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.